Imagine that you're talking to the fire chief at a fire department, that you just found out that your house is on fire, and you're talking to the fire chief. You're not there. And you're saying, hey, how is it going? And the fire chief says, everything is under control. We're not going to have a problem. We'll get this taken care of. Then the radio chirps. He gets on the radio and he says, hey, we're going to need some super tankers. We need 3 more trucks. This thing is out of control. And then he hangs up his radio and goes back to you and says, no, don't worry. Everything is under control. Well, that's not going to make you feel very confident, right? And that is an example of what really happened yesterday with the announcement of the federal funds increase, but also more looking into the comments that were made during the question and answer session and in the notes. So basically what we saw was the Federal Reserve increase the federal funds rate by 0.75%, which was expected. It was almost a calm response to where we are. The markets expected that to happen, but in the discussion in the question and answer session later on, Jerome Powell said that, hey, basically inflation is more stubborn than we expected it to be. We're going to have to be more aggressive than we thought we were going to have to be. We're going to have to raise the federal funds rate higher than we thought we were going to have to raise it. They actually mentioned that they're going to bring the federal funds rate up as high as 4.5% this year in 2022. We're at 3.25% today. So they're going to raise the federal funds rate by a full 1% to 1.25% just in the next 3 months. So that's a pretty steep increase. That doesn't make the markets feel confident that the Federal Reserve is going to be able to control inflation like they said they were going to be able to before. And when they're not confident about that, that is bad for home loan interest rates. So let's take a jump over here to the markets. Now, you see that we are down 83 basis points today. That is not a good day. Home loan interest rates climbing, even though normally increases to the federal funds rate would bring down interest rates. Well, we're not seeing that happen right now because of the insecurity that the markets are feeling about the comments from the Federal Reserve. The 10-year Treasury up 18 basis points, almost to 370. Not good for home loan interest rates either. You see the charts here as we just continue to drop off a cliff here. We're seeing our home loan interest rates continue to rise again today. So where are we on the Brent Bruce Daily? We are, let's run the scenario. Now, I want to make a point now about the Brent Bruce Daily before I show this. I've been talking to a couple of my real estate agent partners, especially, the last couple of days with all that's been going on. And I've heard in more than one occurrence that people that they're showing this information to. So basically, a real estate agent has a lender that they've been working with, and the real estate agent says, hey, check this video out. And the lender on the other side is telling the real estate agents that my numbers are not true, that those are not true, that this guy must be charging some extra points or he's not showing you some different fees. I want to make sure that you understand that the numbers that you are looking at right now, and I'm going to show you the scenario that I'm pulling up so you can fully understand what I'm talking about here. So I'm going to I'll change this to California because some people have asked about that as well. This is the scenario. 30-year fixed purchase, $480,000 purchase price, 25% down, 800 FICO score. It is the perfect client. Let's do a 91730, which is Rancho Cucamonga. But these are the interest rates. I'm going to run the scenario right now. And we have 6.5%. Okay, so we were at 6.25 yesterday. We're at 6.5%. Guys, these are the real interest rates. This is with no origination points. This is with no discount points. These are my real rates. I want to get that through very thoroughly here. So if I open this up a little further, you can see that we can get down to 6.375 with a little bit under a half a point. If you were to pay a point, 5.999. All right, so that's where we are at today. Not really as bad as I would expect when you're looking at a drop in the mortgage-backed security market of 83 basis points. That is a rough day, but hopefully we're going to be able to hold on to that. Hopefully the markets settled down here today, and this was kind of the big hit from the digestion of the comments yesterday with Jerome Powell and the Federal Reserve, and we will start to see everything start to creep back up in the other direction because all the technical indicators and technical signals really point to mortgage rates having a rebound and a little bit of relief. So that is what is going on today. Let me know your thoughts, questions, comments. Make sure that you like and subscribe to the YouTube channel. and I will get back to you again soon.